Businesses are all going to be judged on earnings and earnings per share. And so we need to be looking at metrics that ladder up to that. Some of the stuff that in cannabis that we've historically looked at doesn't do that. So if we break apart the various parts of the value chain, we look at them all differently. So if you're looking at retail, just use the basic retail metrics that you talk about in any retail facility.
Sure.
How many people are walking in the door? At what rate are you converting them to purchasers? If they're purchasers, how much are they buying? What's the average ticket size?
Sure.
And then secondly, are they coming back? It's really that basic. If you're talking about cultivation, it's a question of how much are you producing? How effectively are you utilizing your space? So how much are you producing per a certain canopy space or square footage? In production, it's a similar metric. How efficient are you at making products, taking biomass and turning it into products? What is the loss that you have there? And so what is the ultimate cost of the products that you're producing?
How does that not get lost, though, when you have a company like yours that is so vertically integrated and you have all the operations that roll up underneath of the same umbrella?
So you could, because you have transfer pricing and things like that, so people could obscure it. But what you can't obscure is the bottom line.
Got it.
Right? So if you look at the EBITDA numbers that companies are producing, that's going to tell you whether or not you need to look up the chain and some of the other things to determine whether or not there's some funny math going on. So for us, we've been really proud of the fact that we've been EBITDA positive. We've stated that we have a planned EBITDA loss in Q1 this year, be a little flatter in Q2, but generally speaking, we've been an EBITDA positive company for years. And so what that tells you is no matter what transfer pricing you're using, we're doing something right.
What drives revenue growth right now from your perspective for your business?
There's really two components, your wholesale business and your retail business. And so those are driven by two different things, and in different markets, you have to look at them differently. For us, we've been concentrating really heavily on building a significant retail footprint. And so we're going to see at least half of our revenue numbers coming from retail.
Yeah.
We're building up our wholesale presence in states where we're able to, but when we grow, when we have a lot of retail stores in a particular state, most of the product we make, we sell through our stores anyway, so you're not going to see big wholesale numbers.
Sure.
So it's a combination of the two, though.
On the states front, it kind of comes back to where it is legally permissible, but then additionally, from your side, identifying the right states to move into, even if it is legally permissible there. What goes through your thought pattern when you are trying to identify those areas, those regions, those territories, especially given the fact that this is now layering on another brick and mortar side where we've watched brick and mortar retail struggle.
Yep.
And for a lot of the new businesses that are popping up, startups, they're able to leverage their e-commerce data from their customers to pinpoint exactly where they should be opening up locations.
Yeah, so there's a real challenge in U.S. cannabis, and that is we have a regulatory regime that's unique in every state. And so what we know is if a state is going to limit the number of brick and mortar stores that are permitted to have customers walk in and buy cannabis products and leave with them, that's going to be a better brick and mortar business than your traditional retail because you don't have those limitations in normal retail.
Right.
There is always going to be a down the road threat for e-commerce, for delivery, other ways to make that transaction convenient. But we're at a stage in cannabis where people talk a lot about that, but we're not quite there because we don't have consistent products. So people like to go into stores, they like to see what they're buying, because from week to week, those products can look a little different.
Sure. Very quickly as well, $850 million acquisition, Verano Holdings, how does that factor into the state presences as well?
It's very helpful. They had a really nice base of licenses, or have a really nice base of licenses. In particular, we were really looking forward to getting into New Jersey, Illinois, and Nevada. They have really strong presence in all three states. There are only 12 licenses in New Jersey. They have one of them. They have 12 retail licenses in Nevada, and they're headquartered in Illinois. So when you look at the actual assets, those actual new states that we're picking up that we weren't in strong,
sure,
Verano was a great match for Harvest.